Good evening. Welcome to the Forex Pro Charts weekly analysis for the week of April the 3rd, 2011. This week we are looking at the Euro JPY, and we're starting out with the monthly chart. And if you look at the monthly chart, you can see that the overall trend is down, and price had been moving fairly steadily down with a couple of small retracements over the very long term until price reached this support zone here, and then this month price has moved up very strongly, so we're seeing a large retracement. We don't really think that this is a long-term price reversal because, as you'll see, price is not between the daily armpit and the lower edge of the trading field. So it is most likely that price will retrace either to here or possibly up to here again, and then we'll continue a long-term move back down. So our preferred trading direction is sells, because we want to trade in the direction of the trend. You can take the bounces in either direction, but knowing the trend should help you determine how to protect your profits and how to manage your trade. And also, if you have a trade that is against the trend, and there are other warning flags, you may want to pass. You may want to pass on that trade. That is, you can see here that price bounced. Is bounced off of this trend line, but we are seeing a strong move up so far this month, after price had consolidated for several months. So let's go ahead and take a look at the weekly chart. Okay, so looking at the weekly chart, we see the same pattern. We see that price had been moving down, reached this support zone, and basically price has been consolidating for quite some time prior to going ahead and moving back up here. Now, we can see that the zone that price is in is a very large zone, and you can also see that we have not achieved a 3-to-1 ratio here. You can see that the risk looks to be fairly small because of the size of the zone. We'll look at that risk in a little bit more detail on the daily charts. But because of the size of the zone and the fact that we have not achieved a 3-to-1 ratio, we will probably not be trading this zone when price reaches the armpit. As you know, the 3-to-1 ratio is the odds enhancer, one of the odds enhancers that has the biggest impact on whether or not trades are successful. So even though this is a sell, you can also see that there is no pattern on the weekly chart here. This is just part of an overall downtrend, and it's a very, very large zone. Now, if you take a look at this zone, the next zone that would be reached, that also does not have a pattern on the weekly chart. However, it has achieved the 3-to-1 ratio and has a fairly small risk, although you need to check your trading plan to see how to trade these stacked zones. Actually, this top zone is the zone that would look to be the strongest. It would be with the trend, has the strong pattern on the weekly chart, has clearly a 3-to-1 ratio. You had a red painted candle coming out of it on the weekly chart. Prices move down, and this would be where we would ultimately be expecting to see price go, and you can also see that you've got a very small risk here. That's what we're seeing as far as resistance zones. For support zones, we see that we formed a new support zone here, and then we have another support zone further down. We're unlikely, no matter what price does, to reach this support zone next week. We may reach this one if price reverses. You can see that this support zone does not have the pattern on the weekly chart. It has barely achieved the 3-to-1 ratio, and it does have a fairly small risk. This support zone at first glance looks better because you see the strong pattern on the weekly chart. Looks like a reasonable risk. It is against the trend. However, you need to notice it has already been revisited twice. So if price comes back down to this level, we will want to very carefully protect our profits if we trade this. And I'm not at all sure that we will trade this because it will be the third revisit to the zone, depending on how far up price goes. If price were to go all the way up here and then come strongly back down in, we may trade that. Price did move up fairly strongly here. We can look at the daily chart in a few moments and see how price moved out last time. But that is is an odds enhancer that is not present because it's not the first revisit to the zone. So let's take a look at the daily chart. Okay, so we are looking at the daily chart, and we see the price action where the new support zone was formed, and we can see that we barely, if we've achieved the ratio, we barely have. And I believe when I checked it earlier that we had not actually achieved the 3-to-1 ratio. You see we had a doji here, and this goes down to another support zone down there, the one that we were just talking about. So let's look at this zone. This risk looks small because the zone is so large, but actually you've got about a 80 pip risk right here. So combined with the fact that we don't have the 3-to-1 ratio, there's no pattern on the weekly chart, and you've got an 80 pip risk, we will not be trading this particular zone this week. Now price could get up to these stacked zones this week, and again, either one of them looks okay. The risk is small. We would think that this would be the most likely zone that we'd be trading, but you have a couple of options as to how to trade these particular stacked zones, especially since the risk is so small. You can just opt for the very small risk here. You could put your stop at the next daily armpit, or you could just place a trade here, maybe a smaller trade, and just place your stop back up here. If I did that option, where I entered my trade here and placed my stop here, I would be taking a smaller lot and then go ahead and place another entry here. However, like I said, you do have the option. Probably I would not place my stop at the end of this zone. I would probably place my stop just above this daily armpit if I wanted to take an entry here. It may take price a little while to reach this because we've got this armpit, and if price tends to bounce off the trend wall, we have this trend wall. So if price tends to bounce off it like it sometimes does, it could take it some time to get up to these zones. Let's go ahead and take a look at the hourly chart. Okay, and looking at the hourly chart, we just see the price action where price moved up, bounced off the trend wall, came down, formed a a support zone here, and then price has just kind of moved steadily up into this zone. And because it's so large, we still have quite a ways to go before we hit the 60-minute armpit. So we did not have any trades on this pair this week. We did have some gains on our other trades. We had several trades. We didn't have any fabulous gains this week in terms of ending up with gains of several hundred pips. We ended up with total potential pips of 115 on 3 trades. There were 3 trades that hit the armpit that we did not take, and we explained the reasons for that in the results video, also posted here. So you can go to that video for a little bit closer explanation. Also, if you subscribe to our full analysis and charting services, we discuss those results as well in the weekly analysis for those currency pairs, for each currency pair, so you can see where we did not post an alert and take a trade when price hit the 60-minute armpit, why we did not do that. This week, a couple of those were due to the fact that price happened to hit that armpit right about the time of non-farm payroll, and where we're dealing with smaller stops and so forth, we do not take trades during a major news event because price is just too volatile and can easily spike through a zone and then come back down. So we don't enter trades during a news event. So anyway, we hope you learned something this week. For more information or to subscribe to our full analysis and charting services, please go to www.forexprocharts.com, and you can get a demo subscription there, and take a look at our full analysis and charting services on 10 major currency pairs. Have a good week. We'll see you back next week.